please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The market ends near the day's low. The Sensex closes more than 110 points in the red. The Nifty falls 150 points from the opening highs. HPCL ITC provides support while Larsen & Toubro, HDFC Bank drag.
Monetary Policy Committee holds fire but has its finger on the trigger, underlines upside risks to inflation and raises its near-term and medium-term forecast.
Cipla reports a mixed quarter. Margins improve while revenue is below street expectations. Natco Pharma is weak in trade on the back of management commentary in the conference call.
Tata Group to restructure defense businesses spread across various group companies. Plan in final stages. Announcement likely soon. That's an exclusive.
And Hero Moto gains post good earnings. Management guides for double-digit growth in industry volumes next year. Eicher ends 1.5% higher after reporting an in-line set of third-quarter numbers. Okay, those were the top 5 headlines from the day's trading action today. Hello and welcome to a fresh new edition of Markets Today Talk Back, the show where we tell you about 8 hours of markets in basically 5 headlines. I am Prashant Nair. With me is Ekta Batra. Ekta, hi.
Thanks, Prashant. Well, over the next 30 minutes, we will be discussing the top 5 market headlines and our experts will answer your stock queries. Joining us now to answer all of your stock queries is Gaurang Shah from Geojit Financial and technical expert Mitesh Thakkar this afternoon, or rather evening. Mitesh as well as Gaurang, thank you very much for joining in on the show. But before we start answering all of those queries, let's take a look at how exactly the markets fared in trade today. Prashant, we ended off the day's high and we didn't really take any sort of cues from the Dow close.
No, and we did in the beginning. And I think the story was similar across Asia, and India was no different. So, rewind back the clock to where the Dow left off, and it was a strong, meaningfully higher close. So, on the back of that, risk sentiment improved. Although, as we found out later in the day, it was not a one-way street higher. Asian equities spared their strong gains after strong opening. Take Nikkei, for example. Nikkei at one point at open in early Asian trade was up almost 3.5%. It lost a full 2% in the last 2 hours of trading there, closing up just about 0.16% or so. And that was the story across a lot of the Asian markets. The intense panic which we saw, over the last 2 days, was not visible. I think that one has to say that, and I think that has a lot to do with the global markets, especially US overnight, recovering. What local markets here in India will do is watch global stock and bond indices. Index futures for markets that have been open. And of course, the 10-year is going to be pretty important to track as well. It's back almost at about 2.8% or so. The other thing is global data still remains pretty strong. The last set of data, high frequency data that we had from around the globe was the PMI numbers, and that still indicates that in terms of the economy, in terms of prospects of global growth, things remain pretty sanguine. So you translate and distill all of that to what happened here, and you basically got the Nifty, which was 155 points off the highs, and the Bank Nifty, which was almost 460 odd points off the day's highest point. There was, of course, the RBI policy decision as well, and most of these cuts on the Nifty and the Bank Nifty came after the policy. But I think given the bond market reaction, which has not been negative, it would be wrong to blame the RBI decision per se. It's more global rather than anything local. Ekta, but in terms of stocks, lots to track.
Yes, absolutely. It was all about the financials this trading session. So, for example, we had Yes Bank, Indiabulls Housing, HDFC Bank, IndusInd, Bajaj Finance, all of these stocks ending in the red from the Nifty space. And other losers from the Nifty space included the likes of Ambuja Cement, which was in fact your top loser on the Nifty, followed by Bharti Airtel, which was down around 2% as well. But the stocks which managed to buck the trend, which managed to gain today, included something like HPCL, which was on a complete tear in today's trade. Ended off the day's high, but nonetheless, good solid 5% gains coming in there. Aurobindo ahead of its numbers was up around 3% and we had other stocks which reacted to results. So for example, Eicher Motors as well as something like a Cipla. Both of those stocks reacted to numbers. From the broader markets, we had Natco, which actually lost out very significantly, one of the top mid-cap losers today. PNB also, which was reacting to all of the brokerage commentary which came in post numbers yesterday, and something like Ashok Leyland, which was up 4.5–5% on good volumes, and Dish TV as well, up 1.6%.
You know, what we're going to do is, so that kind of sets us up in terms of what the market did. We're going to play out some opinion which we got in the day. But before I do that, let's quickly get a quick view in from our guests. I mean, Mitesh and Gaurang, thanks for joining in. Mitesh, your sense, looking at today's close, what's in store for us as we come back tomorrow?
Good evening, Prashant. I think very clearly this is a market which, you know, after a big fall had rebounded and given hope of some kind of recovery. But my sense is that I think it proved that a V-shaped recovery might not work out well. So it might be choppy, but the idea should be that there could be more downside given the fact that the indicator setup is still on the negative side. So we would sell on rallies, and I do expect the recent lows of 10,275, 10,300 to be revisited and most likely even broken. So I think choppiness with some volatility for the next few days, but eventually breaking down.
Okay, sell on rallies is the advice which is coming in from Mitesh for tomorrow, and basically saying that the lows would be taken out at some point.
Yes, absolutely. Well, let's get in some opinion now. Volatility has returned in a big way, says Andrew Holland, CEO for Vendus Capital Alternate Strategies on the Indian markets. Jonathan Garner of Morgan Stanley also believes that there is no upside to year-end targets for the Indian markets. Let's listen in to both of them and we'll be back.
After our budget and long-term capital gains tax, you know, that free ride for the markets are over now. And I think the second thing that, you know, the bull market in complacency, you know, has been really hit very hard. And I think, you know, as we kind of go through that in the next week or so, as people look at the different asset classes they can now look at, and bonds become an asset class against equities, I think there's going to be a little bit of, you know, moving around of assets in the next few weeks.
I would just come back again to our base case targets for year-end. We actually overshot them given how much the market had gone up in January. Overshot them significantly, and as things stand, there is still you know, no upside essentially to our year-end targets.
Okay, that's a sobering headline from Jonathan Garner there, but we'll move on. The second headline of the day, and has to be the RBI monetary policy. The decision of the committee has been to keep the repo rate unchanged at 6%. Reverse repo rate has also been left untouched. However, the RBI underlined upside risks to inflation and raised its near-term and medium-term inflation forecast. RBI Governor Urjit Patel also warned against further fiscal deviations and cautioned that growth recovery is only nascent and needs to be nurtured. Let's quickly listen in to what Urjit Patel had to say.
The nascent recovery needs to be carefully nurtured and growth put on a sustainably higher path through conducive and stable macro-financial management. Against this backdrop, the MPC emphasized the need for vigilance and decided to keep the policy rate on hold with a neutral stance while reiterating our commitment to the target on a durable basis. Looking ahead, the MPC noted several upside risks to the inflation trajectory. The firming up of international crude oil prices, the hardening of non-oil industrial raw material prices, and stronger pricing power among firms. While inflation will likely move in the range of 5.1 to 5.6% in the first half of the next fiscal year, i.e. 2018-19, favorable base effects, including unwinding of the 7th Central Pay Commission's HRA impact, combined with expectations of normal monsoon and effective food supply management, may see inflation easing to 4.5 to 4.6% in the second half, with risks tilted to the upside.
Okay, well, that is the RBI governor there, but Lata Venkatesh is here with with her editor's take on this time's policy. Lata, over to you.
Well, the long and the short of it is that the bond markets have read the monetary policy strictly as not so hawkish. And the main encouragement for them is that the March 2019 end inflation number has been projected by the Reserve Bank at around 4.5 to 4.6%. That's a big relief, because even with that in mind, they are not at the moment hiking rates, and despite the fiscal deficit targets being pushed back, fiscal consolidation timetable being pushed back, the MSP getting structurally perhaps more inflationary, and the trends we are seeing in global commodities, both crude and non-crude, the Reserve Bank has chosen not to change that FY19 inflation number. That is a major relief for the bond markets, which means that although from now to March 2019, there isn't even 4% inflation reading, the Reserve Bank is not hiking rates, which means it is reading its mandate as not 4%, but as 4% plus or minus 2%. It's chosen not to drive home that 4% number too much. That is a big relief, and that is the big takeaway from this monetary policy. Good for bond markets, at least as of now.
Okay, all right, Lata, thanks very much for that. So that was the second big headline that we were tracking today. But the third headline for today is Tata Sons is moving ahead with its plan to restructure its defense businesses spread across various group companies. The company will soon announce the rejig involving Tata Motors, Tata Power's defense arms, which is in final stages with an intra-group transaction worth 2,800 crores. Tata Advanced Systems will emerge as the defense powerhouse for the Tata Group. Nisha Podar is here with these exclusive details.
This could be one of the first restructuring plans by Tata Sons under the leadership of N. Chandra for a more cleaner and organized Tata conglomerate. Now, what we do gather from sources with direct knowledge is that the defense restructuring for one powerhouse of all the defense businesses under Tata Sons is soon to be announced, likely this month. Under this particular plan, 3 group entities, Tata Motors, Tata Power, as well as Tata Industries, would be selling their defense assets to Tata Advanced Systems, which will be the umbrella company for all defense manufacturing under Tata Sons. Now, for Tata Motors, there is TAL manufacturing, which is into aerostructures. That, along with a part of the specialized vehicle business for defense purposes, could be sold for about 800 odd crore rupees. Tata was likely to retain a large part of that vehicle manufacturing business and still continue in that defense space in some form. Tata Power's SED, or Strategic Engineering Division, could be sold for about 1,000 odd crore rupees, and Tata Industries' Tata Advanced Materials, which is into armor products, would be sold for close to about 1,000 odd crore rupees. So total intra-group transfer and transactions would be close to around 2,800 odd crore rupees, which would create one hub and one powerhouse for all the defense businesses of Tata Sons under Tata Advanced Systems.
Nisha, thanks very much for that. Let's take some questions that are coming in, and this is Tata Power. I think we got a question on. Pallavi Jha writes in, she bought 500 shares of Tata Power at 93 rupees a share, and she wants to know if she should hold or sell. Gaurang, your sense, Tata Power?
Thanks, Prashant, and good evening to all of you all. We do have a positive coverage on Tata Power, and I think with this, restructuring that is we do have a positive coverage on Tata Power, and I think with this, restructuring that is under the leadership that's happening for various Tata Group companies. One of the issues with Tata Power remains the Mundra UMPP, which is again, sitting like a big heavyweight on the balance sheet, and there are issues. And we've also heard that there are ways and means that the management is looking at, including the chairman, to resolve this Mundra UMPP issue. We remain positive, and of course, the policies of the government also augurs well in terms of power for all and power 24/7 for all. This again, power generating companies will do well. So long term, continue to hold on. Bad days, use downside to even average as well.
Okay, well, Mitesh, what would your view be on Tata Power? It's not given much in terms of returns.
Yeah, in fact, it's not really participated on the upside, but I think it's done good base building in this range of about 70 to roughly about 85. It did break out, it's come back into the range. But I think let it get past 85, 90 again, and I think momentum should come back. Eventually should head towards 112, 115. So in that sense, it's a safe bet to possibly, a low beta stock, a safe bet to park your money for the next 8 to 10 months.
Okay, that is Tata Power. We have to take a quick break. Gaurang and Mitesh, stay on with us, but we will come back, continue to take questions which are coming in from our viewers and pose them to the both of you. Stay tuned.
Welcome back. Well, straight to our fourth headline of the day then, the big pharma earnings. Cipla and Natco Pharma posted their third quarter numbers. First up, let's look at Cipla. The key highlight was the margin improvement, which really beat street expectations, which came in at around 20-odd%. Although there was a revenue which came in missing street estimates, so it was at around over 3,900 odd crores. The net profit was lower this time round due to a large spike in depreciation because of the tax adjustments in the US. So that's basically how Cipla reported its numbers. The US, growth was around 5% on a sequential basis as well. So that was actually a positive which came through, but it declined year on year. But to Natco Pharma then, the company posted what was a mixed quarter in terms of the overall P&L. But what really dragged the company this time round had to be the commentary of the management post the conference call. And, things such as the US pricing scenario in the at this point in time, plus also how exactly the outlook for the US business is looking, as well as for key drugs such as Copaxone generic and them seeing competition going forward. So that stock lost around 8-odd%, Prashant, in today's trading session.
We've got a question from viewers, Ekta. So Twitter user Pramod Nair has 450 shares of Cipla. He's paid 627 rupees a share for them, and he basically wants to know whether he should continue to hold or sell. So let's get a quick fundamental view. Gaurang, if you have coverage, what would you tell him?
So yes, Prashant, we do cover Cipla, and like Ekta was referring, the only miss that we felt was the revenue front, and we believe it is one-off in quarters to come by. There should be catch-up. So from a long-term point of view, continue to hold Cipla.
And Mitesh, how are the charts looking?
Nothing much promising here actually. The stock might get to about 630, 640 and then 550. I don't see there's a range breakout happening. I think I would possibly suggest if somebody wants to make money by staying invested for next 12 months, maybe a switch to Reliance would be a better choice.
I mean, how is the pharma index itself looking? Or a bunch of stocks. I mean, how is that space holding up?
See, it's been underperforming, one, and Pharma is the only stock doing very well. We, I think, are now showing early signs of medium-term reversal happening in charts of Glenmark and Sun Pharma, partly to a certain extent, I think, on Wockhardt Pharma. But that about, I think, the pharma index is very close to its 52-week low of around 8,500. And I don't see, I think, unless until we see the pharma index get past 9,700, there will be a bigger reversal happening. And that could happen with stocks turning. So for the time being, pharma might just continue with this base building for next few months.
Okay, well, the final headline today is big earnings from the auto space. Let's begin with Hero Moto. The stock gained in trade after reporting a steady set of Q3 numbers, closing up a little over 0.5%. Profit grew 4.3% year-on-year to over 800 crores. Revenue was up close to 15%. The management guided for double-digit growth in industry volumes next year. So that's on Hero Moto. But on to Eicher then. The company reported a mostly inline set of numbers for the third quarter. Net profit came in at around 520 crores. Up more than 24% year-on-year. Margins came in at over 31%. Stock closed over 1.5% in the green. Okay, well, we have Twitter user Uman Agarwal who has a query on Eicher. 20 shares at 29,500. Wants to know the view on the stock for the next 6 to 12 months and a price target range as well. Gaurang?
So, Ekta, we've been maintaining a positive view on Eicher Motor for a very long time. And along with the RE business, that is Royal Enfield business, which was seen a staggered performance, even during the demonetization period, Ekta, this particular company did not see any degrowth because there was a waiting period of almost about 3 to 6 months, depending upon which category of motorcycles you want to buy. What I would look forward is the new product launches that they did in the niche high-end segment. 650cc Continental and GT models they've launched. Now they did this display in the overseas market. I think a little bit of detailed commentary in terms of the Indian, numbers and launch, etc., would definitely help us in our outlook with Eicher Motors. And equally robust is the commercial vehicle business. So long-term, continue to hold on.
All right, Gaurang, thanks very much for your time. Good getting that perspective. Mitesh, appreciate you joining in here on the show. Thanks very much. Ekta, so fingers crossed it's over to the Dow now.
Yes, absolutely. And not to mention the Dow futures as well. That plays as critical a role these days. But nonetheless, it's a wrap on this edition. Thanks for watching and have a good evening.